Hi, this is Brian Resney, President of Resney Wealth Management. I'm bringing you an important update about the economy and the investment markets to hopefully better your retirement portfolio and keep you on track without devastating losses that many investors incurred a couple years ago. I think one of the things that we keep getting emails on is really, Brian, where do you see the state of the economy? You know, they're talking about QE2 quantitative easing off. Do you think there's going to be QE3? I think ultimately there may be a chance, a 50% or better chance of QE3 or quantitative easing, where the Fed basically continues to pump money into the U.S. economy in order to help spur slow GDP growth at best that we have right now. I think the issue in Japan, which I talked about a few weeks ago, is at this point going to be, on a long-term perspective, an actual plus for the GDP of Japan, and I believe that's going to help other economies around the world that are going to basically supply Japan with needed resources and equipment and so forth to rebuild from the devastating earthquake and tsunami that happened after the fact. As investors look ahead, I continue to see a hard road ahead for the U.S. economy. Other parts of the world outside the U.S., especially some of the emerging markets, are actually doing fairly well in a growth spurt. Now, one thing I will say is when we look at relative strength in those sectors, we are very light on the emerging markets because they did have a nice sell-off after a huge run. What you will find in any sector is often after overperformance, they will usually retreat for an extended period of time or slow the rate of growth that they've actually witnessed or participated in on a performance ranking. And this is very typical. That's exactly the time, though, when things do the best, that investors often jump into those asset categories instead of actually taking money off the table. That's one of the reasons why we not only look to use our market trend indicators, but also relative strength coupled with that in order to basically be in the strongest, fundamentally strong sectors and sectors that are outperforming currently, not in the past. So it's one of those things that it's important to look at your portfolio on an ongoing basis and making those fine-tuning adjustments when necessary. Again, our market trend indicators, not only short-term, intermediate, but our long-term indicator right now, our short-term indicator is kind of flashing a little bit of a caution sign, so we watch that closely. If we hit into the intermediate side, that would tell us we need to start getting a little bit more defensive and really watch and protect principal for our clients. We're not there yet. I'm hoping that as we start to recover out of this Japan crisis, which we've seen the market rebound quite a bit in the last week or so, that we will continue on that path. One area that I do want to make a general comment on, because we continue to get mass amounts of calls, questions on this particular one. On annuities, whether it's fixed annuities, equity index annuities, these are the ones with the bonus products that people tell you they're tied to the stock market returns. They're not. And also variable annuities. If you are an annuity buyer, all I'm going to tell you is heed some caution. Annuities are sold by basically salespeople that sell investment products. These people that are selling annuities are not money managers, they're not registered investment advisors, they're not fee only. They're selling you what is best for their pocket, not yours. If you buy these products, you better make sure that you really understand what you're getting yourself into, what rates of return are realistically possible. Realize that that free money bonus is not free money at all. It actually costs you money in the long run. But investors are swayed by emotion and fear, which basically is, hey, protect your money. We'll give you free money if you put your money in there. It's not going to happen. So if you are an annuity buyer, if you go to free lunch seminars, again, I see so many people get suckered into these products without knowing all the real facts. Make sure you understand the facts before you get yourself locked up with a salesperson who may use a title of advisor. That is meaningless. If they're not a registered investment advisor, fee only, they're selling you a product to line their pocket with commissions that is often not good for your portfolio, that you often can't get out of for 10 or 15 years without horrific back-end penalties. This is Brian Resney with the Resney Wealth Report. Make sure you do listen to our show Sunday. We have an excellent show planned. If you do have questions about your portfolio, if you'd like to talk to us about our portfolio management services, if you'd like to avoid all the conflicts of Wall Street and salespeople and actually work with a real money manager who works on a fee-only basis on an active portfolio management built around your portfolio with active risk management constraints within the money management process, call our firm. We'd love to talk to you. Until Sunday's show, have yourself an extremely profitable day.